Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have a weekly strategy roundtable discussion where we talk about Tradespoon tools, Yellow Tunnel subscription, Tradespoon subscription, current market conditions, and how to take advantage of the current market volatility using Tradespoon and Yellow Tunnel tools. For those of you who are new, please take a look at my bio. I was Executive Vice President, Head of Technology at Options Express from 1999 through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. Very proud of that experience. I want to take this opportunity to say thank you to all the Tradespoon and Yellow Tunnel subscribers. Because of you, I'm able to do what I enjoy professionally, trading and managing my own money. I've been doing that over 15 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have master's degree in computer science, specializing in technology and science. Since I'm going to go through live examples, please take a look at the disclosures. Trading stock and options involves risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education. Informational purposes only. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. Back, good morning. All right, before we get into specific trading system, let's talk about current market conditions. So Spiders is retesting the 302 level. This has been a significant level. It's right at the 200-day moving average, which usually is a key support. We briefly broke through it on June 15th. The pre-market futures on June 16th were as low as 293. So 293 is a strong support that has been overhead resistance in May, April. This was a support in February during the initial sell-off. So I think this is pretty much beginning of the summer correction that we have talked about it. The way I'm looking at the market, I think the top is set at 323. Potentially market can retest that maybe next week when we have unemployment numbers and retail numbers for the months of June. If there is a positive surprise, market can rebound back to 315, 320 side. But I think if we have that, it will be a short rebound like we had yesterday. We rebounded to 310, 307. Now we're trading at 301. The pattern so far is to continue retesting the lows. So I think it's just a matter of time. And I'm looking at that the lows will break the support. Value stocks already broke through the support, financial sector, industrial sector. We've seen already broke through this support, and next level of support is 92, which corresponds to May low. So the value stocks are already retesting May low, and I think Spiders and growth stocks will follow. It will happen either next week or in maybe after July 4th. But at this point, I think this is just a continuation of the correction. I think it will stop at 50% retracement, 280. Sometimes market overshoots, so maybe 270. But I'm trading with the assumption that 315, 320 is overhead resistance, here to stay, and looking at the value stocks that the market will follow, and by July we'll trade around 280 and 270 level. Some of the key indicators to keep an eye on is dollar, currency dollar. Right now it's sold off, trading in this consolidation phase for the past couple of weeks. Not rebounding back, there is no strong rebound, so market is not selling off, but it's staying in the space. And I think as I would keep an eye on the dollar, I think as it approaches 98, potentially 99 level, market will rebound. But you can definitely see sell-off, and stronger dollar is probably inversely correlated to the market. So I would watch this level. If dollar breaks through the 98 level, I think that's when the spiders will continue to sell off. And spiders, the key level to watch is 293. I think as long as the bulls are able to hold on to 293 level, which is 50-day moving average, and the lows for June lows, then the bull market is intact. If 293 breaks, then that's, I think, is the beginning of the correction. Treasury market is important. We've seen support at 162. We broke through the support. On the May unemployment numbers, markets rallied, Treasury sold off, now Treasury rebounded, actually trading above the key 162 support. So this is another confirmation that the correction has probably started or in the beginning phase of the summer correction. So I would keep an eye on Treasury. I think long-term Treasury set overhead resistance 168, 171, but with the July-August correction, I think Treasury can reach 168, 170 level, already broke through the support level. So I would keep an eye on Treasury. Volatility is important too. No panic in relative terms, above average, historical average, but nonetheless no spikes in fears to the initial phase of COVID-19. So VIX is still relatively intact. In terms of different indexes, Nasdaq has been outperforming the market. Looks like it's at the top around 1,010 to 50. I would watch today's close. This is important. Again, support level around 97.87, 97.82. If technology breaks through the support level, that could accelerate the descent of spiders. So technology is sitting at the key support level. Junk bonds staying at June low. Looks like it's slowly breaking through that level. I think same thing. If junk bonds break through the 50-day moving average, the next level of support would be 95, 96, and that would accelerate the sell-off. So today, closing today, Monday, I would keep an eye and see if there's continuation of this downward momentum. Metals and miners, again, looking at staying at key support. Looks like it's for a couple of days trading below the 50-day moving average. Again, key support to watch. Multi-month support. Germany, 200-day moving average, sitting at June low. Home builders trading slightly below 200-day moving average. Outperforming the market, hasn't reached the June low. Industrials pierced through the support. Again, testing the 50-day moving average. I would keep an eye on the industrials and value stocks in general. Energy is down, already broke through June low. Probably on the way to test the support here at 40. Defense sector, money is not rotating to defense sector. We see consumer staples are underperforming, sitting at key support June low. Financial REITs already broke through June low, has been underperforming, and utilities also below June low, testing this key support around May low. So I would keep an eye on defense sector. Also biotech, similar to technology, leading the markets at the top, and key support is 50-day moving average. Healthcare, trying to test the 200-day moving average. And financial sector leading the market to the downside, pierced through 50-day moving average, broke through June low, and if this level doesn't hold, probably will retest 20 in the next 2 to 3 weeks. So that's my view on the market. How do you trade in current market conditions? Very important. You need to have an opinion on the market. My opinion is that, short term the top is set. we might rally 3-4%. Longer term, maybe a few months. I think the bottom is set. We'll probably either trade around 290 level and 293 will hold. More likely than not, we'll break through the 293 level and trade around 280 level. But these are just an opinion, and trading is about having an opinion on the market and investing money based on that opinion. There is no wrong or right. This is more of an observation and looking at technical indicators, looking at microeconomic news, and investing money. So at any given point, there's things that we cannot control. If tomorrow there will be a treatment, a lot of companies are looking for the treatment or immunization. If that news comes out next week, market will probably not break to 93 level, will continue to go higher. Same thing next week, there could be positive surprise in terms of retail and unemployment numbers. The market also can go higher above 293. So you need to consider both scenarios and always concentrate on things that we can control. Right? I can't really control what the unemployment numbers will be. I can have an opinion, but ultimately I could be that opinion could be correct or incorrect. So very important to first concentrate on things that we have control over, which is what Dr. Maneker, when he joined us on Yellow Tunnel, talks about the inner market and the outer market. And the inner market is your biases, the way you brought up, where you are on the journey as a trader, and what is your risk tolerance level. But everybody can control things that within their reach, and the first things that you can control is having a trading plan, right? Nobody can take that away. You write it down, your rules. For my number one rule is cash. How do you allocate your portfolio? What is the mixture of your portfolio? You 60% in bonds, 40% in stocks, 90% in stocks, 10% in bonds. So portfolio allocation is important based on where you are in the trading journey and where you are in your retirement path, right? We can be more aggressive, less aggressive. We all have different allocation models based on our age, based on portfolio size, and other factors. But on average, 30% of portfolio should be either cash or bonds, right? Usually equity allocation, average equity allocation, maybe 60%, 70%. So cash is important, especially if you're trading only options. Then I would say cash is probably higher in my option portfolio. Sometimes I keep 50% of the portfolio in cash. The second rule that we can control and should go into your trading plan is portfolio drawdown. Osama, thank you. I think gold will continue, right? So gold, you can have gold, you can have treasuries, you can buy VXX. So you can buy asset classes that are inversely correlated to the market and hedge your portfolio that way. So portfolio drawdown is very important. I trade combinations of stock and options. In both cases, whether it's a stock or option position, I don't allocate more than 5% of my portfolio per trade. So, and that's probably the average. Again, if it's smaller portfolio, maybe it goes as high as 7%. If it's larger portfolio, maybe it goes as low as 2%. But that's my allocation. Whether it's stock trade or option trade, no more than 5% allocation per trade. So to calculate portfolio drawdown, I'm looking, if I have, let's say, 10 option positions, and they all highly correlated to the stock market, right? Though these are value and growth stocks, let's say, right now highly correlated to the market. So if the market is in correction, I have 50% stop loss, right, on these positions. So if it's a 50% stop loss on the stock or option positions, then if I have 10 positions, 5% each, and my stop loss is 50%, then my portfolio drawdown is 25%. And then, if you again talk to portfolio managers, they will probably say, well, it's on average it's probably aggressive, especially if you just start trading or you're just learning. So then the only way to reduce this risk, instead of 25%, I think 12% would be more appropriate. Then you only have 5 positions, right? So making that decision is very important, and constantly following that decision, I think, is the most important 2 rules that you can learn in trading. If you master just these 2 rules, then all you need to have, in addition to true discipline, good signals. If you know how to manage your cash and your portfolio drawdown, just these 2 rules, and you have signals that generate you 75% accuracy, which is what Tradespoon and Yellow Tunnel does, then that's, I think, the most important 4 rules, right? Cash, portfolio drawdown, signals that give you 75% accuracy, and then that's the 3rd one, return on capital versus probability of success. And then the 4th rule is to make sure that you're following your trading plan and you're following the portfolio drawdown rules in terms of 50% stop loss, and maybe your target gain is anywhere from 20 to 40%. So if you have 3 out of 4 successful trades, if 1 trade is 50% down, and 3 trades, let's say on average 30% up, then every 4 trades, all the money that you invest in, your portfolio grows 30, 40%. And that's how you need to look at the market. This allows you to be disattached from any single trade. A lot of people ask, I have this trade, it go against me, or what should I do? When should I buy? When should I sell? My answer is always, it should be dictated by your trading plan. You need to have a long-term view on the market and long-term view on your trading plan. Just like when you run a business, you need to have a business plan, and you execute on a business plan. You have expenses and you have revenue, and you just need to make sure that revenue outpace the expenses. And you have to have a long-term view on the market. Maybe 1 month you invest into infrastructure, or you invest into marketing, and maybe your expenses are a little bit higher than your revenue. That's okay, because you're investing in a long-term business. And then the next month, the money that you spend on the advertising will bring you additional revenue. So the way you're managing your business, your cash flow, your revenue versus expenses, is just like you managing your market. You have to look at it as a business, and you have to have a long-term perspective. You need to have a discipline, true discipline, and that takes time. So trading plan is important. And the second thing is, just like in business, you have financial controllers that constantly look at your accounting practices, your business practices, and validating whether you are following your business model or not, right? Because you sell investors the view and the business model, but then you need to have an accountant and financial controllers and board of directors to make sure there are checks and balances, right? And you're following your business plan. Business trading just as important. I mean, you can have a great business trading plan, but if you don't follow your trading plan, if your accounting practices need improvement, then then there is always, then your business is suffering, and your trading is also suffering. So very important, the financial controls. You can obviously hire an advisor who can help you manage your own money, and you validate your trading plan based on your individual goals. That's one way to do it. The other way is to have a trading journal. I'm a big advocate of trading journal. All my trades, I document them, whether they're successful or unsuccessful. I review them. I review my unsuccessful trades and successful trades. And in the trading journal, when I place a trade, I go to my trading plan and say, how closely do I follow the trading plan in terms of these 4 rules: cash, portfolio drawdown, probability success versus return on capital. What is the probability of signal being correct? And then the 4th rule, am I managing my entry and exit correctly that follows the portfolio drawdown rules? So trading journal is the ability to write down your decisions and also be able to go back to your trading plan and grade yourself, right? Just like when you have an audit, they give you a grade, how well you've done managing your cash flow and your accounting practices. Trading journal is the same practice. It's a checks and balances. You can do it yourself. Just be honest with yourself and open-minded, right? Very important. Emotional intelligence is important. Being open-minded, live in the moment, be present, and put your honest thoughts on a piece of paper. Nobody needs to read it. This is just for yourself. And this is where you grade yourself. If you follow your trading plan, your 4 rules, and you have successful or unsuccessful outcome, you give yourself A or B. If you deviated from the trading plan and you did not have successful, or you had successful or unsuccessful results, you put C and D. right? You follow trading plan A and B, whether profitable or unprofitable trade, and if you didn't follow your trading plan, you put C and D. And just like in school, the goal is not to have C and D and only have an A and B. And that's once in your trading journey as the evolution of your trading experience, you will see how that process will help you transition from different thought processes and from different levels of confidence in your trading journey. And it takes time. It's hard to, I mean, Dr. Mann can identify 4 stages of trading. You know, you have stage 1 when you just begin, stage 4 where, you know, your trading plan and trading journal just comes natural to you, and it becomes more or less like a software program, just does things automatically. So in that journey, it's important that trading journal can help you with that trading journey and reach the 4th stage of the trading journey. So how do you trade? You know, step 1 is cash, trading plan, trading journal. We talked about that. That's important. Then you have your first step. You need to have cash. Rules about cash. Second rule is about stop and target gain, stop losses, and your portfolio drawdown. The third rule is find signals that give you 75% probability, or maybe use another system that gives you 90%. But you need to know what is your, you know, what is your probability of success. Just like when you're playing poker and you have certain hand, you need to know what is, you know, what is the percentage of outcomes will be in your favor, right? Before you make a decision. In the poker game, trading is the same thing. You need to know what the probability of the signal is before you invest on that trade idea. If you trading based on your feelings or based on the news or based on, you know, gut feelings or somebody else's gut feelings, and there is no probability, then it's hard to have that a trading journal, right? It's hard to have a trading plan, business plan that you can show to your investor and validate. So you need probability of success. That's why when you you know, managing others people's money, the first thing they're going to say, you know, what is your return on investments? You know, what is your trading plan, right? What kind of asset classes you're trading? You know, how many trades you do, and what's the percentage of winning trade, and what is the percentage of losing trade, and what's your portfolio drawdown? So you need to have that the number, the probability of success, and that's what we are doing at Tradespoon and Yellow Tunnel. So let's go back to Tradespoon. So at Tradespoon is unlike Yellow Tunnel, Tradespoon is concentrating on live portfolios and trading signals to provide these 70% signals and provide them either giving you entry and exit point like active trader, monthly trader, and weekly trader. These are the 3 models that I'm trading in the live portfolio. Or you wanted to participate in a live trading room environment. We have access to live portfolio, so you can see all the orders, all the positions when I enter, or Scott enters and exit the position. So that's Tradespoon. So the 3 models at Tradespoon are active trader, monthly trader, and weekly trader, right? Active trader, we're giving you 3 positions, 3 signals every single day. So today, the signals were HRL and Oracle. So only 2 signals, 2 bullish and 2 bearish trade ideas. On Yellow Tunnel, ideas that we're concentrating more on the trading psychology. But some of our members do want to have access to trade signals with specific entry and exit points. So we do offer, similar to active trader, called aggressive power trader. So aggressive power trader gives you sometimes 2 signals, but sometimes model has more than 2 signals or 3 signals. Then if you look at some of the previous days, then sometimes there is more than 2 signals, right? In Yellow Tunnel. So Tradespoon gives you up to 3 trade ideas, bullish and bearish per day. Yellow Tunnel can give you as many as the model has. And if there's concentration or clusters of certain industries that are leading the market, then you can see that by where the signals are occurring. So that's the model. We have active traders. So next one is weekly trader, similar approach, but this model is concentrating 2 to 5 days. Again, you get 3 bullish, 3 bearish trade ideas. On Yellow Tunnel, we just released a new product called Weekly Power Trader. Same thing. It's if the model, we have several models, provide you more than 3 signals, then you can have up to 10 signals that you can choose from in the model that gives you 2 to 5 days. So these models help you decide if you're new to trading or you don't like to have too many choices, you just want up to 3 signals, then weekly trader on Tradespoon is just fine. And a lot of people prefer to have less signals. But there are some people that requested that, a lot, especially in the live trading room, they see I have a watch list of sometimes 10 symbols, 8 symbols. People want to know about this the day before the market opens. So that's where the Yellow Tunnel, aggressive power trader, and weekly trader came through. So on Tradespoon side, not only do we provide the signals, the active trader, monthly trader, and weekly trader, we actually give you live portfolios that you can follow. And there are 4 live portfolios. One is Elite Trading Circle. So Elite Trading Circle is where I actually trade on daily basis, right? So you can say, what were the trades for the past 7 days? Click on go, and via email or via SMS message, you always would get specific. You will get signals every time I trade at the time. So if I open LLY, close LLY, you get the signal and the price. Apple put, if I traded Apple put and I close Apple put, then you have a signal that is that shows you gives you live access to my portfolio. So Elite Trading Circle and SMS message not only gives you access to morning bell and closing bell, this is where you have live trading room and you can actually see me trading these models. But sometimes market moves outside of the trading hours. Sometimes I adjust my position outside of these market hours. So then you have a trader log, and that's what a lot of people requested, that they want to see at any given point. They can go in and see, did I close this position? Did I open this position? What was the price? And they want to be notified via SMS message. So that's Elite Circle. Elite Circle gives you access to all of the Tradespoon tools, the 3 models, and access to the trading portfolios that I'm trading. And there are several portfolios. One is the premium portfolio. It's a different service. If you don't want to, if you don't trade actively on daily basis, right, you have another full-time job, or you have a hobby, or you just don't feel comfortable trading that often, and you're looking for maybe a couple trades a week, then we have a premium portfolio. Premium portfolio is 1 trade idea a week. And this week we recommended buying Apple, right? So you can just buy Apple at the price $349.72, or in my case, I'm trading spreads. So we give you choices. So I put on a spread for 320, 330 call spread for Apple. So premium portfolio allows you to pick and choose based on your comfort level. You can either stock, option, spread. We're providing you with the video, instructional video that explains why I got into this trade, what is my time horizon, what's my view on the market, and also probability of success and return on capital. So this is a premium service. Again, you get email and SMS message every time I trade. You can see all the open positions, all of the open working orders, and performance of all the trades. The next one is Robo Investor portfolio. Robo Investor portfolio is similar to premium portfolio. The only difference that I trade stocks. I mean, you can trade options also using this portfolio, but this is a long-term portfolio, more of an investing than trading, right? I don't trade in and out of this portfolio. Usually a position can be a couple months, even couple quarters. So it's a long-term holdings of the stocks. I'm not limited by the time, even if the market sells off. The advantage of stocks is that you don't have to sell all of your stock position and panic, even if the market does correct. You usually wait and you rebalance your portfolio. You sell weak stock, buy strong stocks, but you have time. So Robo Investor is the collection of, again, on average 1 trade per week. So you get 4 new trade ideas a month. And it's a portfolio of anywhere from 12 to 20 stocks. And you can see that, if I see that the market potentially can sell off, then I reduce my number of positions. I actively close these trades. You can see that in performance. If I see that the market is an uptrend, then maybe I have more exposure, more positions. So that's Robo Investor portfolio, Elite Trading Circle, and Weekly Trader. And live portfolio. Live portfolio is Robo Investor, premium portfolio, the spreads, and then Elite Circle and Trading Room are the portfolios that you can actually either watch or access via SMS message, and I trade collection of all three models. How do you join the afternoon webinar? The only way to join afternoon webinar is to subscribe to Elite Trading Circle. Live, you can subscribe to premium portfolio and you have access to morning bell. But if you want to have access to the closing bell, then you need to subscribe to Elite Trading Circle. Thank you for the question. Yeah, so the new service, Paulo, thank you for the question. The new service on Yellow Tunnel, the Weekly Trader, is it's a new service. The model is anywhere for 5 to 10 days. It's different. It's a similar model, but slightly different from the Weekly Trader. An idea of Weekly Trader on Weekly Power Trader on Yellow Tunnel is that you get more than 3 symbols. Right now, you're probably going to get the same number of symbols because market is in neutral stance and there is no uptrend. But back in March, back in April, when the market started the bull run, model picks up. Model is very good on picking up momentum. So momentum stocks that are getting into momentum, or if they're losing momentum, model is really good on picking it up. And I usually know whether we're in bull market or neutral market or bear market by number of signals that is generated by the model. If yesterday model generated 0 signals for active trader, today it only generated 2, where usually I get 10 or 20, then I know that S&P 500 stocks are losing momentum. Model doesn't see any of them in confirmed uptrend. They're either in neutral stance or slightly bearish. So the idea of having more than 3 signals can give you an indication whether there is a turning point in the market, or it can give you an indication of which sectors are leading the market. Like in the past months, almost on a daily basis, I had signals in the semiconductors or healthcare stocks. So when you see these signals that are clustered in a specific sector, then it helps you make a decision which sector is leading and where it makes sense to invest. So that's Weekly Power Trader. Thank you, Paula. Dan, if you want to know which sectors are best in the market, the best screener we have for that is Stock Forecast Toolbox. So if you have a tools membership, I usually go into Company Screener and Company Finder. So this first screener, Company Finder, basically, it runs only once a month, and it grabs all the historical data, and it uses Stock Forecast Toolbox, but it uses monthly model, right? It basically, each candlestick is 1 month. So it looks at all those S&P 500 stocks and looks at different sectors and see where the momentum behind which sector. And then it assigns you the value. So as of June 1st, when the model ran on June 1st, you can see which sectors were leading the market: aerospace, defense, banking sector, conglomerate, because the value stocks have outperformed. So we have computer software and services probably on the first place, right, as June 1st. So you know that this sector is the strongest. Electronics and semiconductors, 42%. So semiconductors was the strongest sector as of June 1st. And you can always go into a specific sector, look at specific industry, and see which one is leading, right? Semiconductors, and equipment. AMAT, KLIC, LRCX. So you see this is the sector that's leading the market, in which are the stocks that are in confirmed uptrend. But it doesn't react to short-term fluctuation, right? Right now, market is under pressure, so you would have to wait till July 1st to see if the trend has been broken, right? Because daily, weekly fluctuation doesn't mean that the bull market is broken, right? So that you would have to wait. Dan, thank you for your question. All right, so spiders have been trading in well-defined range. I think 302 is an important support. 302, 300. This is 50-day moving average, 200-day moving average. This is June low. This is May high. So this is the important line of ascent. We've seen on June 15th, we briefly, pre-market futures hit 293. So I think the line in the sand is 293, right? Right now we're trading at 300. I think we will retest 293 in the next 2 to 3 weeks. I mean, it could be next week, could be, in the next 3 weeks. We'll see what the unemployment numbers looks like. But I would, at this point, reduce the exposure to the market, right? Because I know that best case scenario, maybe 315, 320. I don't think we're even going to retest 320 with this continuation of downward momentum. I'm not sure where the positive news can come from, except, if there is a treatment, treatment of coronavirus or vaccine. I mean, that can rise the stock market, or if the number of cases in Florida and California and in Texas all of a sudden start going down. Right now, the bear's case is that the number of new cases has going up in several states. That means people will not go to work as early as everybody anticipated, right? There are delays in Disney reopening and gym reopenings, etc., etc. So that's the bear's case, and I'm not. So the bull's case, right now, bear is in control. It was the news flow, and the bulls will have to wait till next Friday, to see what kind of effect it has on the June numbers. So that's thank you for the question. So that's spiders support resistance level. Thank you. Faust, for yellow tunnel, weekly power trader is renewed every year. So you have a trial. Weekly power trader it's $9 for the first 30 days. Aggressive power trader is $17 for the first 30 days. So you can try both of these services, and then yes, the aggressive power trader gets renewed every month. Weekly power trader renews every year. EWY. South Korea. My view on emerging markets, on Asia in general, that it's overbought, and by July, I think my view is that it's going to continue making lower lows and lower highs. I think dollar will rebound, but it could be short-lived, right? The market can correct in 10% in 1 week and then rebound the next week. So I still think that the bull market is intact. Even if we break the 293 level in SPY, the bull market in emerging market and in Europe and in the United States, we are in a bull market, and we can have 10 to 15% correction. And by the way, it could be short-lived, only a few weeks. So I think in general, the theme is that people will buy into corrections, depending on the news, obviously. If the rise of number of coronavirus in the world continue to go higher, and the unemployment, it will affect the unemployment rate. It will take longer than everybody anticipates. It could be prolonged, right? The sell-off. I don't think it's going to be the case. I think yes, there's spikes in coronavirus, but they will start in the next couple of weeks and the months, they'll start slowing down. So market will sell off as long as the number of cases are continuing to go higher. But as soon as they reach the plateau, I think or before that, the market will rebound. But I don't have any long positions that expire in July. The long positions that I do, let's say Elite Trading Circle, I just put down a trade for Apple, right? So I purposely did the October to give myself more time in case market does sell off, right? And in this example, I do debit spread. So I'm buying deeper in the money calls, right? I have an order to buy 320, 330 call spread for $5. It's trading right now, it's 657. Because A, I'm waiting for a pullback, and B, if the market continues to drop, then I can, with the call spread, I can close the short leg and leave the long leg, because I do expect short-term correction. Paolo, no, the yellow tunnel and Tradespoon right now. I mean, I'm the founder of both companies, but we keep them as separate companies. We have these events where both members join from both communities. We have live events where both subscribers join, but the models are separately. All right, any other questions about the models, about your subscription? All right, so let's just, since we do have another 15 minutes, so active trader, let's look at active trader. For June 26, so you have stock like HRL, and the model gives you two choices, strategy A and strategy B. If you see, the way I usually trade in live trading room, I look at the pre-market futures. If I see market went from 308 on SPY to 302, it's down 2%, right? If market is down 2% and I see it in pre-market futures, then I don't go with strategy B, I go with strategy A. I basically say, why don't I wait till HRL reaches the 4802 level? And sometimes market will rebound and this price will never get entered, right? Because it's 4832, but the model predicted 4802. Or if you're a more aggressive trader, you think that we just reached 200-day moving average and the 200-day moving average will hold just like it did yesterday, and we will have, end of day rally, then you buy it at 4867, right? At the market open price. Right now it would be down 36 cents. So you always have strategy and strategy A and strategy B. They're designed for aggressive trader versus less aggressive trader. The logic is strategy A is using the predicted low from stock forecast toolbox, and strategy B, it just uses previous day close price or the open price. And you can buy a stock, again, an active trader, 1% stop loss. So if you got in at 4802, 1% stop loss would be 4754. And target gain is also 1%. So we're looking for 1% price fluctuations. If you want to leverage your portfolio, you can always trade options, right? Instead of buying HRL for $46, you can buy option that expires today, deep in the money, 46 call, and you buy it instead of spending $48, 100 shares, $4,800. You're buying one contract for $200. So you're leveraging your portfolio and you're reducing your risk, right? If all of a sudden towards the end of the day market sells off, then you can't lose more than $2, right? In this case, it's 5%, but still, it's limiting the downside. So that's active trader, 1 to 2 days time horizon. It is in bullish trend. You can look at the vector. If the vector continues to be positive, I guess you can hold a few days more. But these trades meant to you hold them for 1 or 2 days. And you can see example of these trades here when I traded. This week I traded a few of them. LLY, right? LLY I held for 2 days. Trading LLY, stock and option, and Apple. These were the few of the trades from today. And sometimes I buy stock, right? In this example, I bought stock. Buy at 359.85, sell it at 382, and sometimes I sell options. Sold it for 212, bought it for $1.86. So that's active trader, similar to aggressive power trader, same approach. We talked about weekly trader, same thing. It's a model, 2 to 5 days time horizon this week. IWF. So I traded IWF, same idea. I could wait for predicted low for IWF, or I can buy it at the previous close. I decided to buy the Friday's close. So same approach. IWF did not, Russell 1000 did not have weekly options, but I know that IWM and IWF trade in high correlation to each other. So same approach, looking for 0.5% to 1% price fluctuation. On Monday, when the market opened, sold it for 95 cents and closed it for 24 cents. Actually, the next day. All right. So that's the weekly trader, 2 to 5 days. And finally, if you're more of a longer term trading, then you would go into a monthly trader. Monthly trader this week. I don't think I traded in Amazon, MasterCard. I don't think I put on any new position. But same thing on Monday when the market opens, you can buy Amazon at 26.01 if you see market to the downside, or you can buy it at 26.75. So Monday was which day? June 22nd. So June 22nd, same thing. So if you bought it on June 22nd, 26.80, you would be up on the stock about 5%. Or if you waited for predicted low, well, in this case, I think 26.01. If you bought it at 26.01, then we waited for predicted low, it never reached an Amazon. But if you bought it at the previous close, 26.75, then the market would be up 5%. So you can see strategy A and B has its own advantages and disadvantages. Strategy A is more conservative, higher probability of success, but you trade less often. Strategy B, you trade more often, but probability of success is less. TJ, if the range trend dial is yellow, I would look at it as neutral because we're taking average. So even if some vectors are positive, the question was how do you interpret these on stock forecast toolbox if you see that if you see range trade, they say negative, right? But some signals, some vectors are positive, right? How do you interpret this information? So this is just an average of 10 vectors for the next 10 days. So if it's negative right now, model sees that bears are in slight advantage, right? The market is oversold, right? It predicted 302 to be support. It's trading right at the 302, so it is oversold, but the trend is to the downside. So basically selling to the rallies. If you see market reaches 307, 310, then you sell into the rallies. That's how you would interpret this information. And you get a model grade A. Model grade A means that in the past 30 days, model has been accurate actually 88% of the time. So 9 out of 10 times, if the model predicts support to be 302, overhead resistance to be 308, then the stock will close within this range. Sean, Google, Facebook. I think the mega cap technology stock will continue to rally. You can clearly see they're down, retesting again June low. But I think if there is a correction, they will. It will be a short. I think it'll be a short-term correction. You can see Facebook is already broke through this level. Google broke through this level. Let's see, Apple. By definition, short-term correction. These stocks will follow. But I think they will continue to outperform the market. I think that's where people feel safe. So any 5-10% correction, buyers will step in. Thank you for that question. Kevin, we'll see. Yeah. Therapeutical stocks under pressure. Okay. Buy stock or options. Sometimes I do both. The advantages of options, it's leverage, but they have certain delta. Usually it's not delta one, right? So the problem with short-term options trading is that stock has to move. If stock moves by 1%, your in the money option, depending on the delta, might move only 70 to 80 cents. So your move has to be greater. So I would say probability of success is higher with stock because it has to make less of a move. Let's say your target gain is 0.5%. So but you can do stock or option trade. If you're looking to try this subscription, we do have different price points. So you can try, if you click on Elite Trade in Circle, you can try it out and we give 30-day money back guarantee. If you still have questions about the pricing structure, just open up a support ticket. We do have pricing here for our regular prices. I don't even know if Elite is offered here. Probably not. No. So yeah, if you're interested in trying Elite, you would just click on Elite circle and try it out. Yes, these are, so everything in live trading room environment, this is all trade alerts. If you're part of the Elite, Premium, or Robo Investor, you will get SMS message when I trade. So if I enter the trade or exit the trade, the Premium, Robo, Elite, you get SMS message, and in Elite you actually have a trader log to see. So Paulo, Premium portfolio does not include Elite Circle. So you don't have access to trader log, you don't have access to closing bell, and you don't have access to weekly trader. That's what Premium have access to Robo Investor, and they have access to Premium portfolio. They also have access to active trader and monthly trader. The average holding period for the trade for active trader is 1 or 2 days. For weekly trader, I would say it's a week, and for monthly trader, I would say it's a month. Average holding time based on the model. In a live trading, so the question is, do I trade, forex, futures, penny stocks? I personally, not in a live trading room environment. I mean, I do trade futures, but we have support for futures and forex, so you can use futures and forex tab, Bitcoin tab to look at our predictions, but you will not find them in the live trading room environment. So average option premium price, usually look at 30% the width of the strikes, and usually it's the average of $5 spread. So if I have to pick an average, it's $3, right? It's $5 spread, and usually I buy it for $3. Why, take risk of credit spreads. And I do trade spreads. I do also trade butterflies and condors. So you can see, let's say today, this is probably more of a complicated example of trade. Nike, right? So sometimes we do not earnings trade, or if I want to hedge the position, I leg into a condor. So we do trade four-legged trades like this Nike trade. Sold it for 38 cents, and now I'm buying back. It will expire worthless. But same approach. Without the hedge, I'm looking, if the stock is trading at $90, I'm looking for 0.5% profit if I hold the position overnight, right? So, or if it's 1 or 2 days, I'm happy with 0.5% to 1% gain. And again, that's long-term approach. If 3 out of 4 trades are successful, and one winning trade out, takes out the one losing trade, then I have 2 winning trades. Even if it's 0.5% gain, then every 4 trades, the portfolio grows by 1%, 2%. The money you invest into these strategies. Kevin, Microsoft closing stores. Yeah, so we know that Microsoft, Apple, a lot of companies will, Disney will prolong the reopening. Now the question is how it definitely has an effect on the unemployment numbers, and I think that's already been reflected in the stock price. And now next Friday we'll know whether it's a positive or negative surprise. It could be one of those things, no matter what the numbers are. It could be one of the triggers to actually sell, right? Even if unless it's really great numbers like in May, it could be just the news like the Fed announcement that a reason for people to sell off. And the fact that we keep testing this level means that unless there's some positive catalyst, it's just a matter of time to break through this support. Yeah, so Nike, I'm gonna let it expire worthless. Thank you. If you're a peers trader, do me a favor. You should have a profile now on Tradespoon side and both on Yellow Tunnel side. Just type in your first name, and this way you will appear. I will see your first name. Otherwise, you appear as trader. Nike trade yesterday wasn't good. Why is it not good? Well, I sold out of the money options. Let's see, is Nike down more than 10%? Well, Nike is $96 right now, at least. I sold 91 puts. So unless Nike drops to 91, another 5%, this should be a successful trade. I'm not sure why it's not successful. I think maybe you did something different. But for this earning strategy, I always looked at implied volatility, and I look at the historical volatility, and I want historical volatility, the max, not the mean, but the maximum historical volatility to be at 2 times the implied volatility. So if historical volatility is 2 times the implied volatility, then usually I just sell out of the money options, like iron condor. Yeah, simple puts and calls probably don't work in the current environment. Longer term trade, right? I do single calls if I do day trading. So for day trading, I think deep in the money calls are okay. But yes, if you're doing longer term trading, especially with the current increased volatility, buying single options does not make sense. I think it's better to trade spreads because you are taking advantage of time decay, right? You're lowering your cost basis, and you're also able, because of the volatility, you're able to break these spreads and finance your short leg constantly finances your long leg. Trading as a business, what is better, business or trading? I enjoy both. I enjoy managing business. I enjoy trading. To me, they're very similar. John, okay, perfect. All right, guys, it's 11:30. Thank you very much. I think right now I would reduce your exposure to the market. If you were 50% cash, maybe you should be, I don't know, 60, 70% cash. But I think if the market pulls back the way, at least I'm looking at it, I don't want to be 100% cash. Sometimes I have this conversation. People say, well, if you think that the market is down, why not be 100% cash? Because A, it's almost impossible to time the market. And B, just because I think it's going to reach 280 level, it doesn't have to reach the 280 level, right? There are circumstances based on the news side, I think it will reach 280. But if there is more positive news, which I cannot predict, then the market might hold it to 93 level and continue to test higher. So you need to be prepared for both scenarios. You need to be prepared if the market reaches 280 that you don't panic and you actually deploy cash to get into longer position. Start deploying your cash to buy positions. And if market reaches 320, maybe you didn't realize you had a large cash position, but you still have equity and your portfolio is still growing. So you have to be, as a trader, I think you have to be prepared for both outcomes. You need to pick one strategy, right? You need to have a view on the market, down, up, neutral. But you need to understand that your view on the market, if you bearish, that the market doesn't necessarily mean that the market is in bear trend. Or if you're bullish, that doesn't mean that the market might not break 320 level for the next 3 months. So you have to always go to these forward-looking scenarios, right? Close your eyes and imagine, we are end of July or end of August. Market is at 280. How do you feel? What are you doing? Or imagine we are end of August and market is at 340. How do you feel? Review your journal, review your trading plan in the future, and just make it as vivid as you can. And once you do a couple of these exercises, you will see like the main motivational force, at least like behind my trading decision, is to look into the future and make sure I'm comfortable with both outcomes. Right? One outcome I'll make more money, one outcome I'll make less money, or have a losing position. But be prepared for both outcomes. And if you're not prepared, if you panic, that's the fear of future regret. Dr. Menaker always talks about fear of future regret. If you're gonna have a regret that you didn't have enough stock position if the market reaches 340, or you're gonna have a regret that you had too many positions if the market reached 280, that means you did not follow that first two rules in terms of your cash and portfolio drawdown, right? Because these are the rules, and you should make these rules based on fear of future regret. And we all have different risk tolerance levels. My fear of regret and another person's fear of regret is totally different. So that's where ultimately you will have to make a decision about how many positions you're going to have and how often you trade. Faust, thank you. Shabbat Shalom. Bach, thank you. TJ, thank you. John, thank you. Yes, the webinar is archived and will be here. under live event recordings. All of the events are recorded here, so you should see it by the end of the day. Thank you, Trader. Have a great weekend. Enjoy your time with your family. Spend some time with your friends and family. Recharge. Trading. One rule that I did not put, but I talk about in the live trading room is you have to be, there's, I believe in energy level, right? That humans have certain energy level, whether these are, electrons, ions, molecules, but there's certain energy level that you have, and that energy level has to be high when you're trading, right? You have to be in the green zone. You have to be self-aware. You have to let go of the past, not worry about the future, be in the moment, understand your variable heart rate, and that comes from how you spend in the weekend. How much time you spend with your friends and family, how much you're running, how much you're jogging, how much yoga you're doing. If you're not investing into your emotional capital, into energy level, and your energy level is low, I would document that in your trading journal and look at the performance. If when your energy level is low and your performance deteriorate, then maybe you don't trade when you didn't get enough sleep or if your energy is low, right? Always think about your energy. And there are actually devices like variable heart rate can actually tell you what your energy level is. So spend this weekend and invest in time into your friends and family. Eric, I'm doing great. All right, Eric, Joseph, Raymond, Trader, David, John, Buck, John, Steve, Michael, Osama, Kevin, Paulo, Sean, and everybody, Randall, Marvin, Faust. Thank you. Have a great weekend. Spend some time with friends and family, recharge. And I hope to see everybody either at the closing bell today or tomorrow or Monday morning. Thank you, guys. Have a great weekend.